The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the April 8th edition, Tuesday. Tuesday. Almost thought it was Wednesday because I was so busy almost preparing for tomorrow's opening call already. I usually start as the market opens. I'm looking ready to see what's happening here, and I anticipated a couple of days ago that by Tuesday morning we should see some kind of reversal to the upside in the market. I believe we're seeing that right now. Look at the E-minis. Look at the 120-minute chart. Beautiful left side, right side price time match to, I can't believe it, to the exact 120-minute bar right there. A low today was made at 1830.75. It retested the 1834 round number low that was formed in the E-minis back on the 27th of March at 10 o'clock. And lo and behold, goes all the way into two buy modes, goes to peak D first, also in a price time match. Then it goes on to a D, squeaks to an E at 1887.50, pulls back in a rectangle formation. Friday has a spike to all-time highs at 1892.50, and kaplop. Kaplop, it comes down in this particular instance much quicker than it went up. But the reality is that in the left side, right side price time match, there's an equidistant move in time. And what has happened now, we've got, this is not leg A, because in the Chapman wave methodology, you need a higher low bar on the right side to make a low bar. How do you know that that's a low? You don't know it's a low until the very next bar. So we have to wait for the next 120-minute bar. Let me just type in 1830.75. With some nice trades today based on some of the techniques. We'll see what happens here. This is really just a starter. The fake out low that looked like it was working earlier and then fading to a new, can you call it a recovery low? I've got to find a word for that. A new, you got to name a date, a new multi 120-minute low, and the spike to the upside now. The challenge is going to get to 1843, which is done, and then hold above it, because 1845 then becomes the next resistance, and 1848 follows after that. Can this move take you to 1859, the 1859 200-period exponential moving average in the 120-minute chart? I don't really see why not, but to do that, you absolutely need to see the IBB. That's the iShares NASDAQ Biotech ETF. Use this Trough F. Oh, man. We tried to go long today, and we got stopped out at small last time. I think it was about 4 points. That's a shame, because I really like the setup. I really, really, really like the setup for a bounce. 221.18. Oh, it just went below the last low. 228, 221.80. Can't complain. We've had some fantastic moves. We are still, in fact, short from the very top. And I'm anticipating we're going to lose a lot of points if this starts to pick up to the upside. But I suspect it's going to make an arch formation. Then the IBB later on will start to come back and retest these levels. So an IBB is a NASDAQ biotechnology ETF. But I want to also throw in here, look how many stocks. If I can find it, what happened here? Okay. Look how many stocks, key momentum stocks, went to the 200-period moving average or below, and then turn and are now turning around. So Amazon, I'm going to put the 120-minute up because it's also important. Amazon, Google probably, it's Google L. Google L. I've redone Google L. Right under. No, it hasn't hit the 520 level, which is my next target on Google. So there's a nice bounce here. We'll see what happens. Let's look at Baidu. Yep, good bounce in Baidu. Went to a trough D. It's a trough D if today's low is not taken out. And in the 120-minute chart, oh, this is what I was talking about. In the cup formation, you've got to be prepared that you're going to test the left side low of 144. I was discussing this the other day and yesterday. 144.16, it went to 145.01 this morning. Now a good spring back of 5 points. It's up. Baidu is up 713. Well, let's do the numbers. And there we go. The Dow is up 19 at 16,265. It was up just a tad this morning after being somewhat weak, and then it plunged and went all the way down to a lower low. Let me just check out to the lower low. Yep, right on that. This is what I show my subscribers every morning. The Dow Jones Industrial Average daily chart with the Chapman wave notation, and I drew in the inside wedge dashed line, which says that we should have a bounce, but sometime towards the 15th or so of April, we should start to come down and test the 16,126 to 16,046 area. We'll see what happens. So the resistance is going to be 16,000 to, I say today, 16,270s, 16,290s, and maybe 16,320s are the levels to look at. But it's a counter trend rally, and you got to be real careful. The volatility index went to a peak seen in the 120-minute chart. Right there it is. This is my overview section that I have for my subscribers. There we go. Whoa. Talking about subscribers, today is a great opportunity to go to the front page of TFNN and check out the Tiger Dollars. Yes. I almost forgot. Tiger Dollars. Just a wonderful opportunity to get a disc. This is the one time you're actually paying up and getting a huge discount. You're getting a bonus for something that you're buying. Not only that, you get a bonus, you get a wonderful series of pre-market tactics and setups and trading, a diagrammatic way of placing, getting yourself ready for the trades for the day with Tom O'Brien. I believe there are 5 of them on 5 different mornings. Man, that should be really good. And now you've got the VIX index right now pulling back. This is my opening call, the part of the overview section. I call it the overview and market today. I discuss how important, in this case, you see that purple line if you're looking at Tiger TV. Let me just get this right up here so that I can also do it with you. Tiger TV. Let's go right here to TFNN. Right to get Tiger TV on your handheld. Click here. Clickety-click. And we're on the way, and I can see us right now. There it is. So the chart that you're looking at, if you're looking at Tiger TV, in my work, that's in the overview section, that is the Dow, 120-minute chart. Went to a peak F at 16,631, pulls back in just 2 troughs to the downside. This is potentially trough B. It went right to the 16,225, 200-period exponential moving average, bouncing off it now. The big test will be, I gave you those numbers. Now, the volatility index is only in a leg C. It says, okay, the VIX index can fail in C. It does that sometimes. So I'm going to have to wait for the end of the day to see what happens. This is just the beginning of an attempt after a pretty darn sharp down move to try to bounce. The TRIN index is giving no signals lately. You didn't even know that there was a big, a very sharp decline in the market going on. It didn't even bounce above 156, 157, $1.57 yesterday. It's high, and the short-term trading index by Richard Arms. The Dow's made 16,631 peak D top, peak F in the S&P, it's 18,097. And I discuss all of these. I discuss the techniques. I discuss how we're going to use the VIX intraday, what levels to look at. If it holds at a certain point, you'll see weakness. What it says right here, starting to get into the high 15s, 16s danger zone for the market. Needs 1520s to start a rally that can sustain. So he went down below 1520. The VIX is at 1510. So those are the techniques that I give every single day. And I show the parameters to watch. I said that the support will be 16,220, 16,220, then 16,150s. Where did we go to? We went 16,180, and now we are bouncing. Bouncing. I'm not having a chance to grab any positions here. Pity, but that's the way it is. So, okay, so we'll go on. S&P, SPX, let's get that right. SPX is trading right now up 5.63. Oh, man, this is a nice turnaround day. And 1851.27 made a low today, and it retested, went below the important low 1839 made on the 14th of March. Today's low is, in fact, let me find this, move this away, is, in fact, 1837.49. Nice rebound. In the weekly charts, it's gone above the 9-period moving average. Hey, one and an eighth day or whatever it is of trading for the week. We can't talk about the weekly chart just yet. Let's go to the comp index. The comp index, COMPX. Comp index is trading right now at up 36 at 41.16. I just want to see this. Oh, we didn't make a new low today in the comp index. That is good action. And just staring at this because I got out of a long position in the future, and I try to get back in. But, you prepare for a show, you got to get your eye off that. Just keep focusing here. QQQ, the Q's 86.44, up 89. Also, did not take out yesterday's low. That's good action. And in the arch formation, we're above the 86.40 low. That's very important. This is the move that says not only must you go to 86.40, you better try to rally right above that doji candle of 86.75, because if you can hold above that, you're into the two important candles. The fourth, the candle that went from 89.41 to 87.24, and 87.52 to 86.46. So the 86.46 candle is going to be really important. That is the candle of 1:30 on the 4th of April. That was Friday. Now let's go on. We're going to look at gold, GCM14. Gold right now is up 10 at 1308. It's gone to a higher high in a cup formation breakout. Now I'm calling this a peak E right now. I don't see any reason to call it E/, I'll put it in because it just makes it clearer. E/B. Emphasis right now on the E, because it's just gone above the 200-period moving average of 1308, and it's pulling back below. It went above there earlier last night. It went there, and now it's pulling back. And 1307 is key support. If gold breaks under 1307, then this move is going to fade very quickly. But in the meantime, it's leg C in the daily chart. This is one of the quickest peak A, peak B, leg C that we've seen in gold for a little while. So keep that in mind. The MACD has not crossed positive yet. The histogram has not gone green. It's still red. And the MACD is just turning up. It's at 22%. So it's kind of a move that we've got to watch very closely in gold. Quickly, the dollar is down 47 cents, and bonds are just about up. I'll be back. Dow's up 44 cents. Nice.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back. Yes, we are back. And the Dow's up 48, S&P's up 8. And that is a very nice turnaround. Will it come back again? I think it might be one little blip to the downside, but it'll be very brief and very short. My suspicion is that we are making some kind of a turn. I had an email asking a good question here about ACI, which is arch coal. Now I'm saying to myself, wait a minute, winter is just about done. Why would anybody be looking at arch coal? And then I'll look at arch coal, 502, 525, 537. And lo and behold, starting leg B in the monthly, technicals are improving. Leg D in the weekly, above the previous peak D, beautiful cup formation after having made arch formations earlier on. And lo and behold, I've got the daily ABCD from 3.79 to 470 down to 407 in March, and then up to today's high of 5.37. ACI is the symbol. Now, what's going on here? Well, I learned a long time ago that you can't really tell when coal is going to rally. It doesn't necessarily have a season, even though you think it does. Have a look at this. Back in 2013 in June, doesn't summer here start around about June? It starts a move from 3.47, and it goes all the way to 525 ABCD in the weekly chart. That's some. When does it finish? In September of 2013. It goes from, we had a very nice trade in ACI, and then I can't remember what happened. A 525 back in September, the week of the 13th of September, and then it pulls back. It pulls back to October to 375 and then starts another move that then fails. So I long ago, the next big move was February of 2014, this year. February, the weekly chart, yes. So it goes to a peak 470, pulls back, breaks above the previous peak. I'm calling this D for now. So I would have to look at the chart and say seasonality, measonality. I mean, who knows? It once had a high of 36.99 back in March of 2011. So, and it came tumbling down, winters or no winters. So let's just do the work on this. Everything right now, this is to get into the trade. So the question is, Larry says, good morning, Basil. If you have time, could you look at ACI? I'd like to buy this, but it seems extended with question marks. Thanks. So, boy, does it ever look extended. But you know what? It's a beautiful looking chart, but it's in E in the daily. It's in D in the weekly. I have trouble with these charts. Not that for my own sake, I have absolutely no problem. If I've done my homework, I'll just say, you know what? I'll make it a much smaller position because I want to know that I'm still using my technique correctly. That's really important. Gringo says, nice pop in FXI, blew me last night. Coal's clout endures in Senate races even as mining jobs fall. Oh, thank you very much. The Den Oil, we always have fabulous information there. So, okay, what I'm looking at here is the MACD's good. Stochastics at 83% and still rising. So, would I buy it now? It's a $5.33 stock. So, I'd do my homework. I'd grab the 120-minute chart, if I can find one over here. 120-minute, I think this is it. 30-minute, 120-minute. There it is. And that's got A, B, C, D, D, E. Then another A. Is that an A? Yep, A, B, parallel highs. C, D, A, B, C, or it's a G. So I'm looking at this and I'm saying, okay, everything in the 120-minute chart is very good, but I'm sensing that this is one of those stocks that right at this particular moment there's something going on. So if you're going to get it, you grab it right here at 533, but you only buy a tiny position, small position, just to say, I'm in the stock. What I really want is a pullback all the way to between 492, maybe 492 to 480 to 483, and it has to happen quite soon. And if it does that, how this thing goes sideways or pulls back is going to be key. So if you had to ask me, would I buy it right? Would I actually buy it right now? When I've finished doing my homework, I'm saying to myself, I'm just going to have to say, I think I've missed this trade. But if it pulls back quite sharply, especially goes to the 494 area, I'll be looking at ACI intently. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Just a real quick thing. I want you to just go back to the ACI chart. Things are very strong. Yeah, I think you just have to have a little patience. So the answer is, I would nibble on a position on the next pullback, but I'd still have to wait for a bunch of things to happen. Why? Because it is a leg D, and after D before it had a big pullback. This is very strong candle formation for the past 4 weeks. That's good. Monthly is improving. I'd like to be in the stock. I would have liked to have been in before. I do remember looking at it about a week ago. Just by chance, I saw it, and it was somewhere around that peak C or so, and I said, hey, that's a nice chart, and then I just completely forgot about it. Actually, I got a feeling that I didn't forget about it. I got a feeling, I said, hey, summer's coming, why bother with ACI? But now look, the correlation actually turns out to be the opposite. This is when it does best, in the summer. So, yeah, at this particular point, it's just a little too high. Now, if you're doing some work and you got some fundamentals that say that you want it, then I'm going to suggest you use the pullback somewhere to the low of today, or 505, but I'd prefer between $5.49 just to start a nibble position. If it gets away from here and goes up again, you're going to might have to raise that. But at this particular point, it's very close to some kind of a digestive pattern. And the candle of yesterday suggests that the close of 502, the open and close at the exact 11 of 502, will be revisited, and that's the area that I'd just start looking at it a little bit. Okay. So yeah, there was another question I had. Let me just quickly search. Oh, the question was, folks using the volatility index, the inverse, no, going long the 200% or 300% of the volatility index. People who emailed me and asked me about this, we are not in that position anymore. So I'm saying I would have preferred for people to have taken profits this morning on some part of the position, keep it as a core because you got in a much lower down. So keep that core position because I do believe that we will be going down. The market will be going down. There's a limited upside. And you don't want to lose a position if it just suddenly turns around. If we've gone into the bear phase and yesterday's triple-digit continuation pattern and then today's continuation pattern with the weakness said to me that you've got to be real careful here. You don't want to give up really good selective. For instance, we are short the Dow. I don't want to give that up at the position that we got in. I don't think it's going back there, at least for now. So I'd like to keep it as long as I can. So I don't want to marry those positions, but I definitely want to be somewhat engaged. So that's the position I'm in right now. Now, when you're looking at a question, oh, that's right, I had a question about gold. What would you do with gold? Well, this is a very tough one for me. I see gold going lower over the next couple of months. We've had a very powerful move from under 1,200 to nearly 1,400. To the 1392 area, making a peak F top in the daily, plummeting down to a trough D at the 1280, 1279 area. Now it's rallying in a very quick A to B to C, holding above the 9-period moving average. But if you look at the weekly chart, I don't know now if we're going to go up to that, to a peak C, because we failed at a peak B once, making an arch formation or that Eiffel Tower A pattern, straight up, straight down. Now we've gone straight up and almost straight down because we haven't broken completely. We haven't broken 50% yet, but we're getting close. And I'm saying, I don't know if we're going to get to the C. I said, I don't think we're ever going to get to a D in this pattern because we're usurping energy in all these Bs. Maybe we'll get to a C. Now I'm saying, I don't know if there's enough strength to get up to 1392.20. But in the meantime, there are certain stocks that are acting kind of okay. The GDX, which I spoke about the other day, we had a caller. Yeah, there it is in leg D. I'm watching this real closely because if for any reason it fails from here, GDX, which is the gold miners, I think it's called the Vectors gold miners ETF, and it pulls back as a 24.57 up 31 cents. If in fact it doesn't break into the 24.90s to 25.10 area in the next 2 days, but instead it gives back a chunk of this gain and it closes under 24. Wow, that is really very poor action. So I'm really not too interested in the gold. I'd like a bit of a rally and another rally later on. I'd like to get into the DZZ 200% short. I've done that before, and you got to buy it and just close your eyes and say, I'm expecting gold to go lower. Let's see where this goes. And that's about it. But I haven't quite gotten to that point yet. So, yeah, gold can go maybe a little higher. Now, let's look at the dollar because that's a key resource for us. The dollar's plummeting. You remember, I keep saying this over and over and over. See, it's just it's boring. The dollar's boring. The dollar can't get out of its own way. And I keep saying that I believe that it's a Fed-related issue, that every time it starts to look like it's going to rally and try to get to the 200-period moving average, bam, bam, bam. Well, they don't use the exponential moving average in the Fed, but whatever it is, they go bam, bam, bam. They whack it down. Now look at this for the dollar, for bonds or the 20-year T-bond fund. See, it's in this trading range. Let me go to the weekly. You can see it a lot better. It's in this trading range. It's starting to make higher highs and higher lows, but it still hasn't really gone anywhere. Oh, I don't think I can go to it right this second. Well, you saw it the other day. You saw the when I was showing the bonds, the yields, the triple yield bonds. It just stuck in a range. So I had a couple of questions. Let me just work backwards if you don't mind. The euro, EUR, USD. Look at this. This is very interesting. It makes a peak. It makes a peak E. And there's a triangle pattern that breaks down from that. That was back around the 16th or so of March. And then it pulls back and it goes to a trough D. Now there's a W formation in the MACD. I kept getting in trouble on Saturday during my Master Trader series. I kept saying, it's making a W, and there was one person who would pipe up and say, it's not a W yet, and she was absolutely correct. In this case, it is a W formation in the euro. I was anticipating that the right side was going to curve upward. In this case, it has. And the euro has spiked very sharply. It's made a peak in the weekly. Now, I can just tell you this, that as far as the euros, I'm going to talk a little bit about the market. I think it's a really important moment to talk about the market. So I'm going to do this in context of the market. The euro has walked the 9-period moving average in the weekly chart. No big shakes, just none of the let's forget that word volatility. None of the parameters, the width of candle, height of candle that you would normally expect if you were looking at a chart from a few years ago. This, since the beginning of January, the euro-dollar monthly, I'm not even talking daily or weekly, the monthly has had a very, very small range. And it's walking the 9 EMA. I'm always very nervous about a small range because very often what happens, you get one zap to the downside. That's why I'm watching this doji candle very closely, and it takes out a chunk of the bars on the left side. Now, I don't know if that's going to happen because the stochastic's been building up. It's at 83%. That's good. And the MACD is still very good, and the histogram is good. And there are a lot of good things that are happening here. But until the euro can really crack that doji candle of last month and break above 1.39660, that's not really good enough. Until it can get above 1.424, the candle of October of 2011, that's the candle that it needs to pierce, and I'll explain why. Because actually, let's go a little bit lower than that. Let's go to 1.4246, the candle of October of 2011. The reason why I want that taken out is because it'll then establish that it's turned this resistance zone into some kind of a, in terms of performance, it'll be a very strong support zone, and that's really necessary. In the meantime, it's just working very hard to try to break the resistance level, and it's done it for a couple of months now. But it isn't convincing yet. But what is convincing is that the decline that we've just seen from peak E to the low that we saw last week in the weekly chart in 3 bars is very impressive if there's a close to the upside this week. But if it gives it back and the euro-dollar currency closes under 1.3758 this week, that's going to suggest it's going to test this trend line, this channel line support level. I don't want to make it messy, but there would be. I'll do it for now. Maybe I'll take it away if it's too messy. That Chapman wave inside track is absolutely key. You do not want to see that break. That's green right there. Can you see that okay? Let me just check. Yes, you can see it. That's exactly right. Made it a little bit fainter. Yep, that's it. So Dow's now up 22, S&P's up 4.41. You see how hard it is when the tide has changed to be able to break and hold to the upside? That's what's happening here in the market. It's just so tough. It looks great, and then just nothing happens. So day is young. We've got our parameters that we're looking for. I do want to talk about this index, HGX. The HGX index is, in fact, the Philadelphia housing sector index. The way I get it is $HGX, and no dots or X's after that, just HGX. And what's important about it is there's a chance that this could be peak F. Now, 198.06, 198.33. Yeah, I have no other way of counting it at this particular point. And because of that, it says, be really careful, because this cup formation that broke out to the upside, if there's a close anytime in April below, it's at 196, it closes 8 points lower than where it is now. I'm just going to have a suggestion that says be careful with the housing sector, because this thing will want to get close to the low. Wow, 164? Let's do one thing at a time. If it breaks under 188, be real careful. That's all I'm going to say, and then we'll go from there. But in the meantime, the weekly chart has in fact got a down arrow. It's in a sell mode, and it's implying very strongly that it is going to break the support of 192.68 that was made 3 weeks ago. And if it does that, then you can just go right down to the 190.08 low of January, the week of the 31st. So what you need to see in the home builders, I don't think you can, is a very strong rally that's going to take the HGX into the candle, the wick of the candle of last week. And if it can get to 203, normally it wouldn't be a big deal. In this case, it could be a big deal. If it can't get to above 203, that's very poor action. If it does and holds, then that candle's high bar can be tested at 206.10. So those are parameters. I wanted to mention it because I wanted to do that 2 days ago and I forgot. So Toll Brothers, peak E in the weekly, peak D, I believe, if there's no new high this week, this month, in the monthly, I'm watching this one really closely. Lennar, L-E-N, Lennar is trading at 39.50, struggling, also peak D, and it is an exact double top. 44.40 was the high back in May of 2013, and look at this. 44.40 was the exact high in February of 2014. 44.30 was the exact high last month. Those could be revisited sometime later, but right now this is the cup formation, and it's broken below 1/3 of its full cup from 44.40 to the low of 30.90 made in August. So that's not yet 50%. Breaking 1/3 says invariably you're going to test the 50% line, somewhere around 37.50. Close under that. The rule in this case is that you go right towards the low of, in this case, 30.90. So I'm very cautious on the home builders right now. Questions in the den. Would I look at Spider, Dow Jones Global Real Estate, RWO? Gee, I don't know if I've done that ever before. RWO, Real Estate World. Same sort of thing. Oh, no, not same sort of thing because it hasn't made. So that goes, folks, this is how easy it is in the Chapman way. If you go low bar, up arrow. Count A, B, C, D. Pulls back. MACD goes negative. Stochastic pulls back sharply. Brand new buy mode starts and it goes. Now, this is going to be very interesting. Is that high? 37.37, 37.34. Wow, if it did an A, that would be better. So this has gone A, and now you got no choice. You're going to go E/B and F/. I'll talk about this. People have asked me about it. I'll talk about this particular notation as soon as we get back. Spider, Dow Jones, Wilshire Global REITs, Real Estate ETF. I'll be right back. Dow's up 13.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, just to finish that off, that's the RWO. This is the Wilshire Spider Dow Jones Wilshire Global Real Estate ETF, acting very well, holding the 200-period moving average in the monthly chart. I just make it real easy. This is what we also spend time on Saturday. Just you grab the top, you grab the bottom, you make a rectangle formation and say, okay, it's going from the bottom to close to the top. If it fails at any point, it's going to make the H that goes to a continuous M pattern. That means if it fails, it's at 44.22. If it breaks under 43, no, if it closes under 42.80, there's a good, in a monthly chart, there's a good chance it's going to try to test the bottom before it can go back to towards the high. The high is at 48.17, so it's 4 points away. Meantime, I think it's just kind of stuck. How it handles 44.72 is going to be really important. If it can close above that, it goes towards the top. If it breaks towards that 42.80, 70 area, then it's going to be failing. Weekly says it's in C, it could still go to D and test the 44.72. So everything is conforming here that this is one of those sectors that is actually doing quite nicely here in this move because it has to do with dividends, I believe. And if you look at the IYR is holding because of dividends. So the IYR is the iShares of the Dow Jones U.S. REITs index. That's mostly, I believe it's mostly commercial. Now, the quick question on Exxon. I say quick because we're about to run out of time. Exxon, XOM, ExxonMobil, trading at 97.55, holding well. Now, this is quite an important component in this whole mix here because it's heavy enough, weighted enough in the Dow to be able to give the Dow greater importance in terms of holding power as opposed to the more vulnerable momentum stock sectors. So in this particular case, dividend, you know what's is fascinating? Just for now, I would consider it in the cup and handle breakout pattern that is acting quite well, that unless Exxon breaks under, it's at 97.06, if it closes under 90, give it a little room, 95.50, closes under 95.50, I've got to consider that it's going to be under selling pressure. But if it just stays in this range here, now I would not talk about it as a dividend stock waiting. I don't know when the dividend's going to come in next, but as a dividend paying stock and one of the heavies in the Dow, I quite like the action here. And this is the one time I would say I see capital appreciation with some dividends, but I would still put in a stop of a point, 1.5% risk. That way you're using your dividends correctly, because you got capital gain plus dividends. And that would say that if Exxon, it's going to be tough, but if Exxon's able to break above 98.85, the high of the 31st of March, then the weekly chart goes, well, if it does it this week, it extends leg B. You've got that V-shaped pattern which says, I'm trying to work my way up to the all-time high, but I'm definitely holding 96.09, the 9-period exponential moving average, treating it as a springboard to the upside. That's where I would use it as a dividend potential stock, because right now, if you're looking at your Procter & Gamble, Cloroxes, etc., look, Procter & Gamble's up again today. Who would have thought that it's trying to tackle and go to a D in the monthly chart? So yes, this is a period where the dividend stocks actually seem to be working. But remember, don't turn a dividend stock into a capital loss. You can't make it up. If it's a dividend stock, you want capital appreciation and dividend appreciation. Real quick, let's do this because we're about to run out of time. We got North Van Hooser coming up. A great option show. I really recommend you listen to it. It's just an excellent show. It teaches you, it does the things that you really want in terms of option strategies. So take an opportunity and listen to great shows all day, all the way through. Now, I want you to just talk about this. The Dow right now, nice candle, but it's going to have tremendous resistance at 16,280 to get to the 9-period moving average of 16,374. I think there's a chance it can get towards there and make an arch pattern before retesting. So if you're...
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.